Hello, everyone. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I want to welcome you to today's webinar, Insurance Opportunities with Property Managers. I also want to introduce Lexi Johnson, who's our professional liability underwriter, and together we will be teaching this course today. I want to introduce Jacob Cole as well, our marketing director, who works behind, or marketing coordinator, and works behind the scenes to make sure everything runs smoothly. So let's talk about logistics. This particular webinar is going to be pre-recorded, but your voice is going to still be very important to us, so we encourage you to chat in any of your questions, and Lexi will reach out to you immediately after the webinar to answer any questions that you may have. So what are Lexi and I going to be talking about today? Well, there's a really great opportunity with the property management industry. So we're going to talk about what that opportunity is and why it's a great class of business for you to go after. We're also going to talk about the exposures that property management companies have so that you can actually understand better how to insure them. We're going to connect the dots with some claims examples. And then we're going to talk about how best to market the business, how to maximize your opportunity for writing commercial business with property management companies. Okay, well, without further ado, let's get started and talk about the opportunity. So, we've all been in a shutdown stage with COVID. We're over 3 years now, and we went from that to another frying pan of, a sort of an economic downturn. But the one thing I want to say is that some businesses did well and others did not. Property management is one of those industries that did really well, that was stable during the COVID years. So you've got a lot of management companies all over the United States that are handling property, real estate, and community association management. In addition, the opportunity is that housing prices have gone up, and interest rates are the highest they've been in a very long time, somewhere between 6 and 7%. I'm going to assume if it's not even higher. But that really has created a situation where less people can afford to buy. And so you've got a larger percentage of American households that are renting their homes. So as the market continues to grow, we're seeing even more management companies that are entering into the industry. In addition, the opportunity is really important because a lot of people that would normally rent their own property are using property managers, so they have a professional handling all of the tenant screening, that kind of thing, because housing discrimination claims are definitely on the rise, and that it really is due to the ever-evolving definition of disability. It's like a moving target. They keep adding some more broader definition of what a disability could be. And also emotional support animals pose a problem as well. It's just the complaints with the fair housing. It has gone up substantially. It's up. Let's see, I think it's 30,000 versus 17,000 that were previous. Well, but 17,000 were disability discrimination. So you've got more than 50% of those that are actually discrimination complaints. Okay. So now we understand that this is a solid-based industry. Let's talk about some of the liability exposures you need to be aware of when you're going after this to write insurance for this industry. So there's really two ways that management companies get involved in litigation. It could easily be caused by their own sole negligence, um, and or named along with the property owner in a lawsuit connected to the premise of the managed property. It's really important to understand the difference between property managers' sole negligence versus that premise related negligence allegations. One involves, the management company solely, and the other is really the property owner's um, responsibility, but they always name the management company along in any kind of litigation related to that premise. I'll talk a little bit more about firewall, things that management companies should and do to protect themselves from this on the next slide. But there's also different litigation exposures based on the type of properties managed. So we're finding, you could have single-family homes. Sometimes these are in an association. Sometimes they're not. You could be managing people renting condo units, apartments, and of course, condominium and homeowners associations. There's vacation properties, mobile home parks, office, retail, industrial, self-storage. I think that covers, the bulk of it. But I think it's important to understand that probably not all of these breakdowns or the different types of properties being managed are as stable or as solid as others. And we're finding that there's, a lot of litigation, and companies are pulling back in certain types of property management, insurance companies especially, because there's a lot of litigation taking place in certain types of properties managed. What we're finding is probably your most stable business to go after is single-family homes, condo units, and apartments. And that's where you're going to find probably, and that's where the growth is happening also, is because that's where those people are renting a home, an apartment, condo unit. So let's move and talk about a little bit more about the liability exposures with sole negligence and the being named, the management company being named along with the property owner litigation. So the management company should always utilize a management contract. It memorializes the terms of the service to be provided. It should include an indemnification clause, and that contains hold harmless language. It's really designed to protect the management company. And it's basically just saying, you're going to indemnify us, bring us back to where we were before, no more, no less, and you're going to hold us, you're going to provide a defense. And so in most cases, that's how a management company would protect itself from that allegation of just being named along with the property owners for a loss that occurs on the designated premise. So the way to get around that is for the management company to be included as additional insured on all of the property owners' liability insurance policies, and that is a protective measure to always check in. That's the first firewall. Okay, so we're also going to talk about the coverages that they need. Now that we've talked a little bit about the, exposures that fall, some of these will make a lot more sense now. We're going to talk about your E&O, your errors and omissions liability, tenant discrimination, employment practices liability, and general liability. These are the four biggies that really, biggie coverages that need to be considered. There will be other coverages discussed by Lexi, but we're going to start with these four because they're probably where you're most likely to have a claim. So I'm going to turn this back over to Lexi so she can talk about E&O liability.
Thank you, Anay. And hi, everyone. Thank you so much for joining. We're excited to have you. So let's start with errors and emissions. So this is your E&O coverage. This is designed for professionals, people with a special skill, knowledge, training, judgment, or expertise. They are considered a specialist or a professional that you want to take guidance from. So it is mostly defined on E&O policies as professional services. And it says services performed by insured, usually for a fee, and it's normally always for a fee. But property managers, they are considered professionals in their field, so they absolutely need E&O coverage. So this is very important for them to have. So what is the errors and emissions liability going to cover? The client always relies on the expertise of a professional. So due to this relationship, the client can suffer financial loss, and that is really the purpose of an E&O policy. And that's also the difference between an E&O policy and then a general liability policy. An E&O policy is designed to cover a financial or economic loss, so it wouldn't cover bodily injury or property damage. So that's normally excluded on the E&O policy. So if a client feels the financial loss could have been avoided, they will generally allege sole negligence on the part of the professional. And again, this is what an E&O policy is designed to cover. So below are other exposures that property managers will have, and I'll go through each one. So the first one, diminished value. This could be on a property that is being managed, and what it means is that they do not manage a property to their best ability, and the owner can't get the rent that they used to. So the owner may sue the property management company for diminished value. So it is an alleged economic loss. And then wrongful eviction, a property management company always has a wrongful eviction exposure, especially as a traditional management company, because you were the ones doing a lot of leasing, so you will be directly involved in those evictions, and that could be with single family homes, apartments, etc. And you could also see this on the commercial side too with tenants or offices. So this is something really important to always remember. And even if the property management company evicts exactly to the law, if someone alleges wrongful eviction, that will trigger coverage under the form. So that's just something really important to note as well. And then failure to maintain, this goes hand in hand with diminished value. Again, alleging you didn't maintain the property, and as traditional management, they're directly involved in maintaining the property, so you have more of an exposure. Administrative and financial errors, if they're the ones doing the accounting or handling the financials, definitely, obviously, it's very easy to make errors. And then you have the regulatory compliance. So is the property kept up to code with federal and state regulations? You have libel and slander, and then you have real estate sales activity also. So some property management companies are also involved in real estate sales, causing that real estate exposure. So some carriers, they will include the real estate, however, some do exclude it. So if the insured is active in real estate sales, then you just want to make sure that they have that covered in their policy and they're properly insured for it. And then personally owned property, some also manage their own properties, so they would have their own exposure to the tenants that they rent to. So if they do have this exposure, again, just confirm with the underwriter, always make sure that they are being covered for it. Okay, so what kind of claims do we see in this industry? The first one is an example. A property owner alleges mismanagement and loss of rent. So he sues the property manager for diminished value and for his financial loss. Again, this is a big one that many carriers see the most, and that is, again, that diminished value that I was referring to. And then secondly, an evicted tenant alleges wrongful eviction against the property manager, as being evicted is a very emotional time. Even if the property manager followed every letter of the law, an allegation of wrongful eviction needs to be defended. So again, being evicted, it's very emotional, especially now with housing being so limited. It's out of touch from a financial perspective also. So if there are any allegations of wrongful determination, it must be defended.
Okay, I'm going to cover tenant discrimination. So this is usually an optional coverage. Sometimes it's included, depending on the carrier, in the E&O form as a sublimit, or it can be an optional choose it or not choose it. And it's the title is a little misunderstood with insurance brokers or with people in general. A tenant can mean someone who owns their home. It can be any occupancy is what we're really, so the occupant's discrimination. And these, as I mentioned earlier about the opportunity, these are on the rise. So that you really do need a management company that's going to understand what all those laws and regulations are so that they can manage this exposure for the property owner who's decided to rent their dwelling. And so there are usually claims of negligence or mismanagement, and they can be quite costly. The defense costs can average over $100,000. And it's sort of, there are some, the downside is HUD, state commissions of human rights, they're sort of actively going after property managers and landlords. Not California is really bad, and other states are probably not as bad. But California and certain parts of California are pretty controlled in this way. They're sending out testers that are going into rental office to see how an agent reacts to the same request asked by someone who is and someone who is not a member of a protected class. So it's interesting. So that's why there's an increase in property management companies going on. And then there's another reason that these types of claims are on the rise is that, again, that it's the ever-evolving definition of disability and what is considered a valid service dog versus an emotional support animal. And these are part of the Fair Housing Act. So I'm going to give some claims examples that just make it really clear. These are just simple, good examples. So disability claims that will arise are on the rise, as emotional support animals cause a lot of confusion, and you can just imagine. The emotional support animal does not have to be a dog. It can be, and a property manager and landlord cannot cite pet policies as emotional support animals are not considered a pet. And I've seen peacocks, you've seen a pig, anything can be an emotional support animal. So that it could get it does and can get a little out of control. And really, that's what property managers are good at doing, is managing that. Another example of a tenant discrimination which is another common one, is it's like, let's just say a tenant of an apartment complex is denied a handicapped parking spot that's close to where their unit is, and they're given citations when parking in one without the proper authorization. They will allege discrimination for handicap disability and the harm done not having a convenient close place to park. So those are two perfect examples of what we see most commonly in tenant discrimination.
Okay, so employment practices liability. EPL has become a growing exposure in all states, and a lot of that is because of COVID. So EPL is designed for employees who can sue their employer for violating a number of employment practices laws that have been put in place to protect employees. So there are a number of federal, state, and local employment labor laws and regulations that create liability exposure for employers. So property management companies, they are actually more likely to be sued by an employee than one of their clients. So a property management company has a huge EPL exposure, especially if they have a lot of employees. And then something to note, normally this coverage is written on a standalone EPL policy, especially in the state of California. So as an agent, you want to make sure to at least offer EPL to all of your clients who have employees, especially property managers. We make it really easy for you. We actually have a template on our website, cidinsurance.com, and we offer all of these coverages on one template that you can download and make it your own. So if you go onto our website, it's under broker tools and templates. And then we're going to go into some claim examples. So these are very straightforward and straight to the point. First one, allegations of discrimination due to various types of race issues, allegations of retaliation due to personal differences, allegations of wrongful termination or failure to promote, and then not being paid overtime for work done past normal business hours. So again, we put these because they are the biggest claims carriers are seeing today.
Okay, and I'm going to cover general liability. So if you're looking at for services performed, your E&O for your professional services rendered that would cause economic loss, and your general liability are going to be your most important coverages. And that general liability is coverage for bodily injury and property damage as a result of the organization's operations. So that this becomes an important coverage for management companies to have, and there are important things to consider when you're looking at this, because sometimes an insurance broker doesn't really know what's being quoted to them unless they have some knowledge of what is going on with general liability in the property management industry. There are really, it's the line in the sand has been drawn. You can get a very inexpensive office premises only, designated premises only policy for liability, general liability. And that really it limits itself to a slip and fall at the office location of the management company only. So, and that's a lot of times you will see that. And sometimes you can get a package, you can get the property included, but that's really what you're looking at there. Especially with traditional property management, we always recommend that they get off-premise liability coverage, because generally they're more involved in making decisions for what happens at the property managed. And so their sole negligence increases in that area. So you would want the property management company's GL to extend to the properties they're managing. And you also can get hired in non-owned auto, which is an important coverage to have, because that's going off the premise of the management company's office as well. And depending on the policy, it may exclude property damage coverage or may not, depending on the carrier and what coverage they're willing to offer, whether they're willing to offer that coverage or not. The last thing I want to mention is that maintenance departments really need to be looked at, because a lot of times you'll see management companies that are also in the maintenance business, and it just because it falls in their the wheelhouse, because they're sending someone out to do the repairs on the properties that they manage. and they may just have their own department within their company. That is something to ask that question, whether they've got a maintenance division, and then you have to find out what services they're providing, and that would have to be included and disclosed and rated on that general liability policy as well. So, what kinds of claims are we looking at that fall into that general liability? So, as I mentioned, there's a premises only policy and there's an off-premise policy. I'm going to give you an example of the premises only policy. That's where it's an office, generally an office exposure. Someone injures themselves while in the property manager's office, and they decide that they're going to sue for bodily injury. I don't see those claims very often, but we do see examples of the second one quite a bit. At site and coverage, on-site coverage, I just realized it's misspelled, is a bigger exposure, and claims for bodily injury are property damage and property damage are common. So let's just say steps were dark and not safe, pavement was uneven, and a hazard, the sink pipe leaked, it was not fixed quickly enough, damaging the floor. So you've got examples here of many claims I've seen over the years where someone falls on the stairs because the lighting wasn't safe. It was dark, or they trip when it's dark and the lighting's not good, and the pavement maybe is uneven on sidewalks, trees, tree roots that are causing the sidewalk to lift is another very common one. And then the sink pipe leaked and it was not fixed, so you end up with damage to the floor. So that gives you some good examples of both. So I always recommend by the way, there is a big difference in the premium between the off-premise coverage versus the premises only. So that is something that they have to consider if they can manage that exposure without paying the price for the premium for that greater amount of coverage.
Okay, so other coverages to consider. So first is property coverage. This is really an important coverage because all management companies, they will have at least one location and usually have multiple locations. So they need to make sure to insure that property within their office. And then excess and umbrella liability, this coverage, it becomes most important if you have that off-premise GL policy that Anae was discussing. If they have that premise-only GL coverage, unless the landlord is requiring a higher limit, which is pretty uncommon, we don't normally see the excess. Cyber liability, this really is an exploding and growing coverage right now, and is really essential because property management companies, they're storing private client information, so they too are exposed to ransomware attacks, which are increasing at an alarming rate today. They aren't only more frequent, but they are also more sophisticated and costly than years past. So as the agent, you want to make sure you're having that discussion with your insured, confirming if they have cyber liability in place, and then make sure, again, you're at least offering it. And then fidelity, again, this is very important. They're managing the money and funds for other properties that they're overseeing. So it's important with the fidelity to purchase that computer fraud and funds transfer because you can't always get that covered on the cyber liability policy. And then lastly, workers' comp. Most management companies have employees, so they would be required to have a workers' comp policy in place. So it is really important to take a careful look at what each employee is doing within the management company so they're being classified correctly. We write a lot of workers' comp for management companies, so we definitely have all the markets that you need. So please note, all of these lines of coverage CID has markets for. We have competitive markets for all of them. So when you have a management company who is looking for coverage or new in business, it's very easy to place all lines of coverage with CID insurance, and we can take care of you.
So I'm going to talk just a little bit about another opportunity that actually can help you grow your commercial book through the property management industry. So it's a great cross-sell opportunity with property management companies. You get in and get the ear of the company owner, and you become their insurance expert for their company. And then you really can step into and start insuring the properties that they are managing. And a great way, if that owner trusts you and believes in you, you can do an insurance review on all of their clients' inventory. And so there's personal lines opportunity and commercial business opportunity, depending on the type of property managed. And you want to do that. You want to do a review of all the client's insurance, and then I would create an expiration date list of all the policies, and then as they come up for renewal, provide insurance proposals for each of them. So, and please, if you have any questions about this, please remember to email or to chat in to Lexi, and she will answer your questions after the webinar tomorrow. So that concludes our webinar today. I want to thank you for joining us, and make sure you check out our website, tidinsurance.com. And we've got so many broker tools. We're really trying to be there for you to provide you what makes your job easier in writing more commercial business. And we hope you take the time to write that business through CID. We'll take good care of you. Thank you again for joining us.